You guys doing an update on the end of the week, month end, just global macro real quick. Little recap of how we did, what we did in the live room today, and then kind of just where we closed and what the risks are over the weekend if you guys are trading futures, or kind of what to keep an eye on into Sunday night, as I think there's a little bit of risk when you're at these big picture levels and there's a lot of kind of news hanging out there around China, etc. If you remember, in December, early part of December, we had a big kind of buy the rumor, sell the news event around China last time, and the market opened up big, and then that was pretty much the high, and the market sold off the next several weeks, really the next month and a half. But let's just talk about it. Oh, also, I wanted to say I'm doing a flash sale because I know a lot of you are kind of on the fence, and I want to get some more people in the room for the coaching session into March. And then just a lot of you I know have been, you're working hard on other stuff, and you want to get in this, you want to do some of the courses and things, and sometimes maybe money's hanging you back. So I'm just doing a flash sale today through the weekend. So this is a great opportunity. Anybody that's on the fence, the coaching, everything I took down by 50%. So if you want to do the coaching and mentorship for March, this is the best value. It includes the course, so our trading model, the 9 hours, the whole directional institutional model that we ran, the rates desk and fixed income on. And then obviously now we've applied it to guys that traded, the big hedge funds that were trading oil, to equities, oil markets, equity, futures. It's all the same directional stuff. So that's, I can work with you on your schedule. I know some of you have been running the afternoons and evenings. But anyway, just message me in River or send me an email, trading@jenkinsrm.com. I can answer your questions, but let's just get you started and on your way to that next level and get breaking through some of the consistency and dealing with some of the challenges that you guys are having. So the course and the options, that's cut in half. The trading course is $2,000. I mean, I paid $12,000, guys, to learn to trade Forex, $1,500 to learn to trade the basics of options. So all this stuff is knocked way down. So I take advantage of it over the weekend. If you need to message me, if you're new, you can direct message me on Twitter. You can message me on YouTube. You can come into the chat room here. Go to jenkinsrm.com. It's free to come in the chat room. You can message me directly. And then, or just sign up here at the trading services. All that stuff is right here. All right, so get the dollar right. You're going to get a lot of other things right in markets. We keep talking about this 97 level is big. So have we closed above it on the weekly yet? Nope. FX has been pretty sideways to range bound. It's just been one big sideways range trade for the last 6 months, really. So we've kind of haven't pulled out a huge amount of gains. It's just some of the stuff we're doing on the Forex side. We're still putting together decent returns. I mean, I like our win rate still on the equities side, or even on the Forex side intraday. We're still hovering around this 78 to 80% win rate. So that's what I want to focus on. We've been doing the same thing. If you guys have been following us here, we've been playing the Dow long, so we're at a 90% win rate. We put together a string of wins this week also, so that's probably right up there at the same level. Gold, we're at the 89% win rate on our stuff in the live room. Here's Euro futures, 83%. So pretty consistent directionally. It's just a matter of trying to put together how you're going to manage your size and your risk around these moves. So the dollar and Forex is still very much sideways. I don't have a whole lot to talk about there. We're still playing an Aussie yen short. Again, look how sideways it is on the weekly. At least the weekly cycle is down. Right, but we failed at the bands. There was a lot of headlines this week in the evening around the Aussie, and it kind of grinds up, and then we've gotten crushed on some of the economic headlines that we tend to agree with, that growth is slowing. But we retraced 50% of the move last night or 2 nights ago, and so this is a good spot. We added to shorts here on our core longer term positioning, and that's our biggest position in FX. We're small long hedges on Aussie versus the dollar, and I'm not going to even touch those until we trade back towards the highs of this week. And same kind of thing on dollar yen, small dollar yen long. Nothing really much to do here. We're kind of at the bottom of the range, but again, look how choppy everything's been. So I'll come out of some of those hedges if we get anywhere in the ballpark of 111. Euro is going to be the same. So the big story, though, is equities back at the top end of the ranges. So this week we tagged the December highs on the Dow. Failed right in front of it the other night. And we kind of testing those same levels. Now, this is kind of an annoying close because we closed above 26,000, and then on the weekly level, we're basically closing right at it. So this is, again, we're teetering right on the fence of where it's going to be difficult if they try to push the market through these highs. There's going to be a lot of people cutting risk and stopping out, including us on the core side of some things. Like I sold the Russell late in the day. We've been playing the NASDAQ short. So we're going to have to watch that. Now, we did some things in the room together, like buying upside weekly calls out to Friday that should hedge with that type of move a little bit. And then just big levels. 9 weeks off the low. I haven't seen this type of run. It's just been a one-way move. It's really frustrating to trade because you don't get any back and forth or ebb and flow. Just been a grind one way higher. But intraday, we've been kind of sticking to the Dow game plan. Bought the Dow well yesterday. Came out of it this morning. Rebought some late this afternoon. Just again, in case we trade up into the highs over the weekend or on the open on Sunday. We're playing the VIX long. This is probably one of our biggest positions on the core side is long the VIX. And that's, again, just been slowly leaking lower. So you had to kind of do some fancy footwork trading in and out of it. But I like the core long. I think it's a matter of time before we see the vol really pick back up. Here's the Russell, what we did. We may have double, triple topped up here. This definitely is the main level. So you can see we've been pretty patient. I haven't traded the Russell other than one time here at the end of January, and then I haven't really touched it. So this week is the first time I bought puts out to March, put spreads, and then I finally started selling some futures up here at this, again, the D's highs. So big levels, you're going to give it a little bit of room here. I don't want to be too level specific and just stop out because you trade through it by 10, 20 points. But treat this as an area. But we did tag the December highs here in the Russell. We did it in the Dow. NASDAQ isn't quite back to the same levels, but it's in the vicinity. And then S&P's, same thing. We did buy some longer outdated June put contracts. Pretty good risk reward to go out the money. You just got to give yourself plenty of time. So that's kind of how we're playing that. Near term, still buy the dips. We're trying to go contrarian long the VIX a little bit longer term. We're setting up some core shorts longer term, but then definitely there's plenty of reasons to be intraday when you're day trading. Aggressive buying the dip near term. Oil, better buyers. Since we closed above 55, it's been a little bit easier to buy the market intraday. That momentum continues to be bullish. I don't have any real reason to think we can't trade to 60 other than the fact that we're pretty bearish the overall global economy at these levels. But inflation's kind of picking up. It has some easier comps versus this time last year and the year before. So inflation can do better, and energy tends to do better. So I'm not interested in shorting oil anymore. Long bonds finally pulled back, but had a tough day yesterday. Or bonds were down yesterday, then right back up today. They were pretty resilient. Still long 10s, still long some 30-year calls. And then gold, same kind of thing. Gold kind of traded like bonds yesterday. Yesterday had a down day in gold, which was actually buying opportunity at 1325. So we'll see kind of where we trade next week. We've been waiting on this daily cycle to kind of play out before setting some bigger longs, bigger positions on the long side, whether you're using minis or actual outright gold contracts, or full contracts. So, but still overall bullish there, silver and gold. And that's pretty much the gist of what we're doing. So it'll be another kind of important Sunday open in the equity markets. And again, we'll look to probably be better buyers of the yen and sellers of the Aussie as well into next week. So hope you guys have a great weekend. Again, message me if you have any questions on the deals we're running. But I would definitely take advantage of this. I mean, I don't think I've done a 50% across the board discount in a couple of years, really. So I hope that helps, guys. We'll talk to you on Sunday.